Hello, my name is Maria Bezubova, and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Today is September 16, 2024, and it is a weekly markets update. Let's have a look at the news of week 37 and see what are the next trends. Also, please check my interview with Chris Vlachopoulos, markets editor for phosphates at ICIS, that was published last week, where Chris shares his expectations for phosphates market in Q4. Indian urea purchase tender resulted in awards for 1,100,000 and almost 30,000 tons of product. As discussed last week, this purchase led suppliers from Middle East and Baltics allocate significant unsold volumes for September and October, which reversed the market sentiment to moderately bullish. Rumors circulate that next Indian tender is expected in early December, but some market players think there could be another tender even before this, sometimes at the end of October even. If it turns true, then the achieved price level might keep through Q4 and even climb more. European buyers are still mostly away from the market, except small lots purchases. Following the Indian tender, Egyptian producers moved their indications for Europe higher at $355 to $60 FOB. In total, last week, more than 45,000 tons of products were sold by different producers out of Egypt, most of it likely to European buyers for September loading. Prices of other African producers, Algerian and Nigerian, also increased. Middle Eastern producers' price ideas moved up as well to $330 to $35 FOB for spot lots. In Iran, Lord Dagan closed a sales tender yesterday for 30,000 tons of granular product, with shipment in September, beginning October. We will see the results later this week. Latest sales of Iranian product happened at 292 FOB for 30,000 lot. In the US, NOLA activity last week was subdued because of the Hurricane Francine that affected both production of CF industries and nutrient plants, as well as port operations. Thus, spot barge sales prices climbed to the level of $319 for short ton. Brazil levels are also up, offered 355 to 60 CFR, but there is not much actual purchase activity now. Paper values are mostly in green, with upward corrections following the Indian tender. Egyptian FOB values climbed the most, to the average of $340 for September, $354 for October, and $350 for November. NOLA FOB value corrected upwards only for September to the average of $317, while October and November values remained almost unchanged. Brazil CFR also remained mostly stable, with a marginal $3 upward correction for September and November. Middle East FOB level was preserved for September and October and corrected downwards for November to the average of $330 due to widening of price corridor on the low end. Ammonium sulfate market prices are mostly stable. About 50,000 of a standard product was sold by Chinese producers last week to the buyers at various destinations, at the price $142 to $45 FOB. All cargoes for end October shipment. Prices for the granular product are at the same level as a week ago, $160 to $65 FOB China. Demand in Brazil is firming due to higher prices of urea. Amsul buyers are expected to step in back to the market this week in order to procure the product at least at the price level of $185 CFR, because the offers were already climbing higher last week. In nitrates and UAN markets, it was another quiet week with no activity. In ammonia market, the prices went sharply up due to the unexpected Maaden outage, which will take out from the market about 140,000 tons during September and October. Suppliers across the globe are lacking volumes to fulfill their contractual supply terms. Thus, fresh sales of Sabic to Tramo happened at $430 FOB, and Sorfert sold the cargo also to Tramo at $550 FOB. Additionally, high demand from India will support the price level, because Indian DAP production in August hit the record level, and more ammonia imports demand is anticipated in Q4. Ukrainian UPZ has restarted ammonia production, but failed to restart urea line as planned. Thus, is offering 12 to 15,000 tons lot for shipment from Yuzhny port for the first time since February 2022, when the war began. In phosphate market, the week was not very active. There was no new DAP activity in India so far. 3 tenders by NFL, RCF and EARL attracted offers from various suppliers at around $640 CFR, higher than previous deals. However, no deals were concluded yet. Year-to-date imports, including lineup for October, reached only modest 2.6 million tons in 2024, in contrast with last year when 5.5 million tons were imported. The main problem for importers remains the subsidy level, which is heard to be granted just marginally. Thus, importers who are losing money now with current price level will need to be compensated in some different way. Prices out of China remain stable at $615 to $20 FOB. But offers to Iran for the tender announced on August 31st were heard higher at $625 FOB. Ethiopian tender hasn't attracted much interest from these producers. The only offer received was from Maaden, and only for 60,000 tons, for shipment in October at around $600 CFR. Current Indian CFR levels look much more attractive for the suppliers. In Brazil, moderate activity happens. The prices remain stable at the level of 635 to 40 CFR. Moving to the fundamentals. European natural gas futures dropped more below 36 euros per megawatt hour, despite forecasts for cooler weather and ongoing outages in Norway. Maintenance at Norwegian gas-producing facilities continues, but sharp drop of the temperature in the northern Europe didn't happen, so there was no immediate demand increase. At the same time, flows of Russian gas through Ukraine is stable. US natural gas futures continue to climb amid stronger domestic demand because of hot weather and supply decrease. Producers are expected to decrease production more on the background of 40% price drop during past 2 months. Additionally, last week about 50% of Mexican Gulf production was affected by Hurricane Francine that reached its peak on September 11. Agricultural commodities future prices increased again this week. Wheat futures surged to $5.9 per bushel, a 2-month high, after Russian missile hit Ukrainian grain ship heading to Egypt, escalating the situation in the Black Sea and driving prices higher. Although grain markets are less reactive than at the start of the war, ongoing concerns about global supply persist, especially as smaller wheat harvests from major exporters like Russia continue to support rising prices. Last week, USDA published its September report for world agricultural supply and demand estimates, which didn't affect the market prices significantly due to just marginal changes versus a month ago. For the wheat season of 23-24 that ended, all indicators turned out to be higher versus last report, mainly due to exceptional results of Canada. For the season 24-25, despite global wheat production decrease by 1.4 million tons versus August evaluation, total supplies will remain unchanged due to recalculation of global beginning stocks. In terms of production, evaluation of Australian and Ukrainian harvest are significantly corrected upwards, while supplies out of EU are again decreased due to problems with the harvest from Germany and especially France that are building up. Thus, world market will see more exports from Canada, Australia and Ukraine in 24-25, season, which will be the key driver of global exports increase. Corn futures ended the week on a positive vibe, climbing from historical lows to the level of $4.11 per bushel. Strong gains in the wheat market helped out corn bulls as well. At the same time, September USDA report hasn't brought any major changes in the sentiment, because only marginal corrections were done. Taking the big picture view, the world existing and predicted ending stocks are still too high to get prices excited. In terms of production, USDA re-evaluated US corn yields higher, increasing the expected production for 24-25 season. However, other market analysts are not that optimistic and propose to wait and see what happens in Q4, and not only with the US, but also with South American crop products. In terms of exports, only Russian volumes were corrected downwards, which anyway didn't influence the general picture much. Soybeans futures price dynamics didn't support bullish trend in wheat and corn. Soybeans finished the week at the level same that week ago, slightly above $10 per bushel. WSD report that demonstrated no major changes versus August estimates for soybeans confirmed, though, that the US is expected to have a bumper crop. Despite the reduction in the US output forecast, it will bring higher ending stocks. So the bearish sentiment in the market dominated at the end of the week. The report hasn't indicated any major changes in the expected exports for the 24 and 25 season. Even the sale of 100,000 tons of soybean to China reported by USDA didn't help to push the price level up. Moving to the shipping industry. Containerized freight index lost another 200 points, or about 8%. Spot rates for containers for all routes are decreasing more. Market sources indicate that demand is weakening further, so more container cost decrease is expected. The Baltic Dry Index marginally decreased during past week. Cape-size segment lost about 1.5% amid softening demand for shipments from Australia to China. On the contrary, Panamax segment demonstrated growth in both grain and mineral demand in the Atlantics. That supported the rates. Activity in Supramax and Handysize segments was minimal. To sum up, the final results of the Indian tender support a cautious bullish trend in the market. However, we should not expect some significant upward corrections in close future, unless there will be another tender announced soon. Ammonia price level is climbing due to outage of significant volumes from Maaden. That tightens availability even for contractual shipments. DAP demand in India continues supporting price increase in the international market, while MAP demand in Brazil becomes thinner. Last week's report from USDA regarding September update of expectations for supply and trade of agricultural commodities didn't bring significant support to the price level. However, all key commodities seem to have touched the bottom already. European gas future prices continue stabilizing, while US gas producers are looking into further production limitations in order to support price trend that slipped significantly in the past months. Containerized index continued losing points, while Baltic Dry Index showed stable performance, mostly due to grain and mineral shippers activity in the Atlantics. So, let's see what is next around the corner. But it will be already next week. Thank you for watching. Please subscribe to the channel, put like to this video, push the bell in order not to miss any updates, and see you soon.